Over the past 6 years of trading, I've tested dozens of strategies, indicators, bots, signals, and even scalps. You name it, I tried it all. And almost all of them, well, they let me down. Except this one strategy, which I've been using for the last 4.5 years. Now, I've been consistently profitable using this single strategy, which is based on ICT smart money concepts, and it's never let me down. Here's why. It's not dependent on indicators, it's not tied to one market condition. It works because it's built on the core mechanics of how price moves, liquidity gets taken, structure flips, and that's when the real move happens. I don't care if the market's trending, consolidating, or spiking with volatility. This strategy works across all of it. It's the same model I've used to scale to 6 figures per month. It's the same one that I teach inside of Algo X. In this video, I'll share why I only trade this one strategy, show you examples of it in action, and explain how it became the foundation of my consistency. When you stop chasing and focus on what works, trading gets simple. The strategy is very simple and it can help you pass your prop firm challenges guaranteed. You just need to watch to the end of this video really. So it's traded on NAS 100. So if we just go here, as you can see NAS 100. We also want to know that the strategy uses the 3-step model. So that will be looking for our market structure shift, our liquidity sweep, and rejection of the low. So rejection of the low. The strategy can only be used using our buys. So as you can see, buys only. Yeah, so let's get straight into it. Very simple. What we're gonna do, we're gonna come to 9:30 a.m. all the way to 2 p.m. New York time, as you can see right here. So what's gonna happen, very simple. And before we get into it, again, if you want us to pass, manage, and get you funded, just click the link below. So we've helped hundreds of traders get their first payout without actually paying a single penny up front. So what happens is that you only pay after you get a payout, and you pay us 30% of your profits, you keep 70%. So just click the first link in the description and we can show you exactly how to help you do so. But let's get back into it. So we trade this from 9:30 a.m. all the way to 2 p.m. New York time. What we're going to look for now is that once we get into the 9:30 window, we want to be able to identify a market structure shift of a high. Once we're able to identify a market structure shift of a high, what we can actually do is look for a order block. So we want to find a order block for entry. And after we find the market structure shift of the high, we do want to identify a liquidity sweep. So very simple. We identify a liquidity sweep and then we just proceed to look for a order block for entry. And not to mention that the time frame we'll be using is the 5-minute time frame. So how often can we do this? We can do this at a daily rate. So the strategy can be traded at a daily rate, as you can see right here. So it's very simple, and I hope you guys do watch all the way to the end of this video. If you've made it this far, don't forget to drop a like, a comment, and please do subscribe. But as you can see right here, what we're gonna have now is boom. So as you can see, the market is doing exactly what it wants to. If the market wants to go up, it can go up. If it wants to go down, it can most definitely go down. So as you can see right here, we had a high like this. We also had a high previously, which was actually the highest point, and it did end up getting taken out, which is also a good sign that, you know, the market is moving in the direction we're actually aiming for. So as you can see right here, what we're gonna do, we're gonna identify a liquidity sweep. So what you want to do is identify a potential liquidity sweep in the market. So in the SketchUp example, it may not look like there's a liquidity sweep, but somewhere within the market right here we can have a liquidity sweep. But just for the SketchUp example, we'll make it clear. As you can see, we have a liquidity sweep right here. Boom. So now we've identified the liquidity. We've also identified the market structure shift. That's perfect. We're basically good to go. What we also want to see is rejection of the low. So as you can see right here, rejection. So when we actually have a rejection like this, it just shows stronger confluence. So it shows that price is not coming back to this entry point at any time to take out this stop loss. So that's a good sign. So what you can see here is that we have the retracement into the order block right over here. Boom. So what we can do is we can try to enter off the order block. We have to wait for price to then retrace into the level, and that way we can enter off of it. So we're gonna put our stop loss just slightly wide of the low, just to avoid spreads. And what we'll do is target a 1 to 2R. So we'll stick to 1 to 2R. Again, if there are liquidity points that's that we can target, then we can definitely go for it. But let's stick to 1 to 2R for consistency. And what usually happens is price retraces into the level and then distributes towards the upside. So what we can do now is we can get into a live example on the chart. So as you can see right here, boom. So now we're on a 5-minute time frame, and as always, we just let the market do whatever it wants to do until we see a clear setup. Okay, so as you can see right about now, we're starting to see a clear setup forming. So what we actually have here is this trendline liquidity sweep. So this is still considered a liquidity sweep, although it doesn't look as if it was as clear as this. It can still look like what we have present. So we just have to work with what we have. What we're also going to do is identify a market structure shift. So you can see we had a market structure shift of this high, which created this low right here, which we seem to also be rejecting, which is, you know, a good sign that the market is ready to be bullish. So now that we have all of that lined up, what we're going to do is trying to identify a order block. So you can see right in here that price tends to get weak and we have this huge indecision candle. So that's a good sign. When we have an indecision candle like that, it means that buyers and sellers are present in this area. So is essentially used as an area for consolidation. So what can technically happen is that price can retrace into this area and it can use it as a reaction point. So we want to look to enter from that area. We'll put our stop loss just about that wide and target a 1 to 2 risk to reward ratio, so just about these highs right here. And let's see what price does actually end up doing. Okay, so as you can see, price ended up getting tapped in, which was all the way right about here. So as you can see, just about there, price ended up getting tapped in. Boom. So we'll let it play. And as you can see, over time, it does end up hitting take profit. So it's a great strategy. And if you guys want to try it for yourselves, feel free to do so. But don't forget to like, comment, subscribe, and I'll see you guys in the next one.